So I think if you look at any kind of a private debt structure, as Raf said, we can talk about a three-layer structure. One is the concessional piece, then you come to the mezzanine piece, and then you come to the senior piece. And different people have different roles and objectives, really. But to state one thing very clearly, none of us would like to lose our shirt in any transaction. We are here to make sure that, because it's not just a question of losing capital, it's a question of making success out of it. As I said earlier, you have to make sure commercial capital comes in later and it self-sustains itself for a period of time, right? So I think if you look at our calibration of the various risk profiles of these various providers, there are providers who can come across the capital structure. They might come in concessional piece, and they might come in mezzanine piece and the senior piece as well. And allocate a certain pool of money to a certain fund, for example, a private credit fund, where they can play across the capital structures. But there are some people, there are some investors who we just do the concessional piece and the mezzanine piece and not the senior piece, depending on the risk appetite. And also, if you play across the capital structure, ultimately it will give stability to the fund and make sure you are able to. I mean, idea is to crowd in more and more, particularly at the more senior end of it, really. So I would say it's based on the risk profile of the institution, for example, institutions like us, we have different pools of capital. We have kinetic pool of capital, which does the concessional piece. We got the catalytic pool of capital, which does the mezzanine piece. And we got the senior piece, which is our growth pool of capital. So we also have different allocations from our government, the UK government, where we play across the capital structures. So they got different expectation of returns. Combined, that's what ultimately reflects in your balance sheet on an annual basis. But they have different benchmarking, really. But last point to say here is, when you take a lower return, you expect the outcomes to be much, much more superior on the development impact side. There is a trade-off, yeah.